Total market cap in cryptocurrency hasn't moved this week. We started this week at 1.165 and we ended the week slightly up at 1.170. So what were the big movers and shakers for the week in cryptocurrency? Well, let's sort this by the 7-day change, and we can see the big increases this week. Render again is up 41.6%, doing extremely well. Lido is up 27.7%, Conflux is up 26.3%, and Pepe is up this week 24.2%. We also see in Synthetic Network up 19% and Injective up 17%. So what were the big losers this week? Well, the big losers, we have the XDC network down 5%. We've got Bitcoin SV down 5.7%. We've got Cosmos down 4.4%. So the losers have lost a little bit and the gainers have gained a bit as well. But overall, the market cap hasn't changed that much within the week. Now, hopping over and having a look at Blockworks research and this chart that they share on stablecoin dominance. And we can see in the last week, the stablecoin dominance has really increased from 11% or last Friday being 12%, all the way up to 16, almost 17% today in stablecoin dominance. Now, what does this mean? Well, we can read this down here and it says, stablecoin dominance calculates what percentage of the total cryptocurrency market cap is comprised of stablecoins. As dominance rises, stablecoins compose a larger share of the crypto market. A rising stablecoin dominance indicates risk-off sentiment, generally led by investors redeeming fiat stablecoins for dollars or sell-off in major cryptocurrency assets like Bitcoin and Ethereum. And I did mention in the weekly update last week that there were a number of large market makers that were actually leaving the market at the moment. Now, we do have a large market maker that will be buying Bitcoin over the next few quarters. And if you stay tuned right till the end of the video, you'll find out more about who's buying and how much they will be buying. So what else has happened in the news this week? Well, first of all, Binance is set to withdraw from Canada, and they're doing this citing new guidance. So Binance has become the latest cryptocurrency exchange to exit the Canadian market. So previously, OKX pulled out of the market, and platforms such as Paxos also announced that it was withdrawing from the market. In a statement released on the 12th of May, Binance said it was joining other prominent crypto business in proactively withdrawing from the Canadian marketplace. Unfortunately, new guidance related to stablecoins and investor limit provide to crypto exchanges makes the Canadian market no longer tenable for Binance at this time. In February, the Canadian Securities Administrators introduced a new set of rules stating that crypto exchanges must have enhanced protection for the custody and segregation of crypto assets for Canadian clients, and they're prohibited from offering margin, trading, credit, and other forms of leverage. So the rules are getting stricter in different countries about how exchanges are allowed to do business. And because of this, Binance is actually leaving Canada and announced they're leaving Canada. Now, sticking on with Binance has also had trouble in Australia. And Westpac, the bank, has placed immediate bans on payments to Binance crypto exchanges. So Binance are also under fire in Australia. Westpac has banned customers from transacting with Binance, the controversial global cryptocurrency exchange, as part of a suite of measures that attempt to slow the growth of scam losses. So it said that it is rolling out a series of scam protection measures. You know, my opinion on this is that crypto is not a scam, but what they have found in Australia and what they're actually saying is often our customers only discover they've been scammed after the money has left the country, making recovery extremely difficult. The trial of our new security measures will better protect customers from scams. All crypto are not scams. There's actually more money moved in fiat through scams and through illicit activity than there is in crypto money. So this is just a crackdown on crypto that seems to be just coming from all angles around the world. Now, just going around the world and looking at another story, and this story is coming from the UK. And in the UK, a lawmaker has said that crypto has no intrinsic value and that trading them should be regulated like gambling. Now, when I read this, I thought that, yeah, yippee, because in the UK, just like in Ireland, gambling profits are not taxable. So if this were to come into play, would that mean then that there is no tax on crypto in the UK? That would be absolutely amazing. However, you know, some cryptocurrency trading is nothing more than degenerate gambling. But when you do your own research and you really look into things, it becomes more of an investment than it does a gamble. And also there's an ideology that comes with crypto and blockchain that isn't there with traditional finance. And this is what the regulators are more afraid of, is this decentralized movement, this freedom of wealth and freedom of transfer between people that they can't actually regulate and have control of. So basically they have said that this lawmaker has said that these tokens are unbacked. So unbacked tokens like Bitcoin and Ether aren't underpinned by underlying assets and have no value. In its Tuesday report, the Treasury Select Committee said the heightening volatility and potential to lose huge sums of money means that cryptocurrency poses significant risks to the customer. Given retail trading is unbacked, crypto more closely resembles gambling than financial services. So like I said, in one sense, I would really welcome this because it would make profits from crypto tax-free in the UK, because gambling profits are tax-free. But again, it shows either lack of education or just a fear that crypto and blockchain and the movement that comes along with it is a threat to current governments and the government setups. Moving on to another big story that broke this week, and this is Ledger. And the headline here is that Ledger hardware wallet hacks itself with latest update growing backdoor concerns. So what actually happened here was that Ledger introduced this firmware update, and this firmware update allows users to basically back up their seed phrase, which was meant to be absolutely not possible at all with a Ledger wallet. And this has given huge concerns and getting great backlash from the Bitcoin and the cryptocurrency community. So Ledger has introduced an optional subscription which allows owners of the Nano X wallet to store backup of their seed phase with 3 separate third-party entities. So what it does is it breaks your seed phrase down into 3 separate parts and it sends it off to other people. It says here the feature will work by splitting the recovery phrase into 3 segments, cryptographically encrypting them with the secure element chip within the wallet, and then sending each of these to a third party. And then if you need to reinstate your wallet, you will have to KYC, you'll have to give them identification and everything else. So you're no longer anonymous when you're using a Ledger wallet if you use this process. And this has really received a lot of backlash from the crypto community. Even some down to saying it's a horrendous idea, don't enable this feature. So we can go down and we can see other tweets. Sure, you could use Ledger's new recovery service and give them your private keys, controlling your assets, as well as a copy of your ID and other personal information. But why then bother with a hardware wallet in the first place? And we can see details of the firmware update that has been issued. Now, Ledger has hit back with the criticism, saying that it is actually being blown out of proportion. But the reality is, and I know this myself from trying to help people and teach people take self-custody of their wallets, it's difficult. And a lot of people don't want that responsibility. Now, if you do want to take self-custody of your own assets, there is a free course available on self-custody, which you can access here or somewhere else. So you can take custody of your own digital assets and not worry about giving control to somebody else. Other news this week. Now, I mentioned at the start of the video that some market makers in Bitcoin left the market, but we have a new entrant coming in. Well, it's not really a new entrant. It's somebody that already holds Bitcoin, but Tether is going to be making quarterly purchases of Bitcoin. So take a read of this tweet here. The last quarter, Tether made 1.48 billion in net income. That's 493 million per month. They plan on investing 15% of net operating profits in Bitcoin. That equals to buying 74 million of Bitcoin, or 2,780 Bitcoin every month. That's 3 times the amount mined per the miners. So this could really drive some buying pressure on Bitcoin. And as we know, over-the-counter buying has been drying up as liquidity has been drying up. So it'll be interesting to see over the next few quarters if this has any impact on the price of Bitcoin. Now, Tether had been holding lots of USD treasuries, and they've been earning interest on these because the interest rates in the US has been increasing and stuff. And that's how they're in so much profit. And they're exiting some of this as well, some of these US. So you can go over to the Tether website and you can read directly from Tether about this. So it says Tether to further strengthen reserves through purchase of Bitcoin with realized net operating profits. Tether already held approximately 1.5 billion in Bitcoin reserves, which is quite a lot of Bitcoin. It also says down here that the decision to invest in Bitcoin, the world's first and largest cryptocurrency, is underpinned by its strength and potential as an investment asset. We can see that quite clearly there. Bitcoin has continued to prove its resilience and has emerged as a long-term store value with substantial growth potential. Its limited supply, decentralized nature, and widespread adoption have positioned Bitcoin as a favored choice among institutional and retail investors alike. Our investment in Bitcoin is not only a way to enhance the performance of our portfolio, but is also a method of aligning ourselves with a transformative technology that has the potential to reshape the way we conduct business and our lives. And this is what the government have fear of because they don't have control of it. Now, there is a video that Tether have shared on this, and I'm just going to play this quick video for you now so you can see what it is that Tether have been talking about.
In a world filled with financial uncertainty, there's one currency that has proven its resilience. Bitcoin is the epitome of a sound and secure monetary system. With its decentralized nature and scarcity, Bitcoin is revolutionizing the concept of money and challenging traditional finance. Bitcoin has defied expectations, shattered boundaries, and provides access to the global financial system to anyone with an internet connection. At Tether, we share the vision of a world where Bitcoin is embraced and understood by all. That's why Tether is going to allocate up to 15% of our operating net profits every month to purchase Bitcoin in order to diversify and improve the resiliency of our reserves. These Bitcoins will represent only a part of the company's excess reserves and shall be considered on top of the minimum 100% reserves that back Tether tokens.
In other news this week, XRP has made the news yet again. XRP are continuously in the news with this fight against the SEC on whether XRP is a security or not. And the decision really should have been made by now, but hey, it hasn't been. But the headline here says XRP lawsuit victory edges towards Ripple after Judge Torres denies SEC motion. So the SEC put in a motion that a controversial speech that was made by him, which was a previous high player in the SEC, where he said that Bitcoin and Ethereum are not securities, that this shouldn't be submitted as evidence and it should actually be sealed. Now, the Judge Torres has come around and said no, they are not granting that and that it can be submitted as evidence. So these Himmons speech documents were actually made in 2018, and he reportedly stated that Ethereum is not a security. Now, the thing with this is that it's been put out there as a win for XRP, but there were other applications that were made by XRP that were also denied, such as how much was made in revenues from the XRP sales. So there are some wins and some losers there, but obviously the crypto market are going to give the positive spin on it for the crypto side. But I like to give you a more rounded picture and let you know that there was applications that were put in by XRP that were also refused. But we did see an uptick in the XRP price from this. Now, last but not least, what I'm going to share with you today, and if you have been enjoying this video, please do subscribe to my channel now and smash that like button so other people find this video. So what I'm going to share is this chart, and this chart shows you how much wealth you need to get to be in the top 1%. And it shows how much wealth you need if you want to be in the top 1%, but it also breaks it down by country. And there's a vast difference around the globe of how much wealth you actually need. For example, in Monaco, you need 12.4 million to be in the top 1% wealthiest people. Whereas in Kenya, you only need 20,000. If we look to Ireland, where I'm based, you need 4.3 million to get into the top 1%. Maybe I'll be there one day. And in the UK, just across from me, you only need 3.3 million to be in the top 1%. We can see that Europe is really ranking highest. Switzerland in there, Ireland is in there, France is in there, UK, Italy, Spain. They're all ranking really, really high. Then we've got Australia actually coming in before North America. And I'm quite surprised to see how low it is in the UAE and in Saudi, because my personal opinion was these were extremely wealthy countries in the Middle East. But this is showing a different picture to me. So that's it for this week's news in the crypto market. Do check back next week and I'll have all the updates for the week for you then. Goodbye now.